Hi, welcome to Master Investor 2019. My name's James Faulkner. I'm the editorial director of Master Investor magazine. I'm joined by Catharine Flood, who's representing Baillie Gifford's Scottish Mortgage Investment Trust. Hi Catharine, thanks for joining us.
Hello James.
Tell us a little bit about Baillie Gifford, because it's got quite an unusual management structure, hasn't it? It's run as a partnership as opposed to most other investment management firms.
That's right. Actually, we go back to our creation to run the assets of Scottish Mortgage Trust, and we've been a private partnership headquartered in Scotland ever since. And I'm proud to say we've had the management of Scottish Mortgage Investment Trust ever since.
Right. And how does that affect the sort of the service that you give to your investors?
Actually, we think this is critical to being long-run actual investors in businesses. Because we're a private company, we don't have our own shareholders to think about, so our clients and our own interests are fully aligned because we don't have any external representatives that we have to think about as well.
Right.
That allows us to take a long-term approach to investing because everybody who owns the business works for the business, for Baillie Gifford.
And you're here today representing the Scottish Mortgage Investment Trust, which has been a phenomenal performer in recent years. Can you give us a little insight into the Trust's ethos and its investment objectives?
So Scottish Mortgage does something a little bit different. It invests in individual businesses for the long term. We don't look at indices. We purely think about finding the very few standout businesses that can make us a multiple of our invested capital over the long run, based on looking at their fundamental operating economics. Actually, there's an awful lot of people who look at short-term market moves and try to predict them. We think if you want to produce differentiated returns for shareholders, you have to be doing something a little bit different. Not many people are willing to think about genuine long-term investing, by which we mean over periods of years. But that's actually where business fundamentals start to win out, where you see the strength of management teams really making a difference to the value they create in the businesses. And if you find great growth companies that are able to become a multiple of its size, then that's actually a pretty good place to start looking for long-run returns. If you do that within a diversified portfolio, that's what we think actual investing for equities should be all about.
Right. And Scottish Mortgage is also quite unusual in that it started to invest in unquoted companies, so companies that aren't listed on the stock market. Tell us a bit about that and the sort of the reasoning why you've started to do that.
Yeah. So Scottish Mortgage invested in Alibaba when it was still a private company back in 2012, but this wasn't an early stage company. This was a valuation of over $45 billion and really the backbone of the Chinese e-commerce market even then. What we noticed was that there were a number of these businesses really being able to grow to scale without being public companies, and subsequently we've invested in Airbnb, which many people will be familiar with, or Spotify, which is now a public company, but 12 months ago was only just listing on the New York Stock Exchange. And actually these businesses are not typical early stage businesses. Both of these are global businesses challenging listed public companies. But actually they're using the new technology that we see coming through with the digitally connected world, data science, to provide better business models. And actually having the opportunity to invest in these, and Spotify was at under $30 billion of valuation when it listed, there's a huge amount of value creation that's not being available in public markets today that would have been if we went back even a decade ago. Scottish Mortgage as an investment trust has a closed pool of investment capital, so our shareholders get liquidity on the exchange. We're a FTSE 100 company, but actually it doesn't alter our investments in the same way it would be for an open-ended fund. So we can use that to our advantage to invest in less liquid securities along with the big public companies that everybody knows us for.
So Scottish Mortgage is quite unusual in that it invests in early stage private companies that aren't listed on the stock market. Does this come with any extra costs for investors in terms of the management fees that they have to pay?
But this is really, as I said, about investing in businesses that are really established. And if 10 years ago we would have expected them to be public, we think that you can't understand investments like Marriott hotel chains without understanding what's happening at Airbnb. So this is very much what we should be doing anyway. And our ability to invest in them gives us access to the information that you just can't get in the public markets. So because we think this is very much what we've always done, we don't charge any extra for it. And there's no separate fee structure for the unlisted part of the portfolio. It remains within that low-cost structure, tiered annual management fee scale that we have for Scottish Mortgage. And Really, this is something we think is extremely important. We all know that keeping costs of investment low by not turning over your portfolio more than you need to for your investment time horizon, by keeping your overall management costs down, really helps you not to erode those compounding returns that we're after for shareholders by taking it away and paying it away in costs. So this is something very much within the ethos of both Baillie Gifford, but also for Scottish Mortgage. And because it comes back to your first question, Scottish Mortgage is our oldest client. This is a very deep, long-standing relationship that's very important to us as a company. We're very happy to support that by continuing using the scale to bring down the cost of investing in such businesses, along with general investing for our shareholders and clients.
Okay, Catharine Flood, thank you very much.
Lovely, thank you very much.